Welcome to this week's edition of the Construction CPA's Coffee Cafe. I am the Construction CPA, Lisa Raish, and we are dropping the hammer on cash flow problems so you can build things that matter. And our topic this week is going to be record keeping essentials for your business and your business taxes. This is an area that clients have challenges with. A pretty significant amount of challenges, to say the least. A lot of times clients either have half the information, don't have it in different places, and so on. So we're going to walk through some things that I think will help you with keeping track of that information. The one thing that I do want you to walk away from this with is, as the taxpayer, it is your responsibility to retain your supporting information for your business. So should you be audited by any one of the taxing authorities, it's your obligation to provide them with the supporting documentation. So really that record keeping responsibility lives with you as the taxpayer and the business owner. So you just want to make sure that you keep track of your financial information so that, again, number one, you have it handy should you need it for any reasons whatsoever. It's a regulatory issue, as well as, again, if you were to ever be audited by any one of the taxing authorities. So, first and foremost, again, you have an obligation as a business owner to maintain that information. And that's really kind of the highest, most important thing to think about. Again, you want to be able to find the accurate information when you need it, should you need it for whatever reason. You want to be able to go back and, even just from a research standpoint, go back and look at prior bills from the same vendor to see, have there been pricing changes, things like that. If you are not readily able to grab that information, you aren't able to do that kind of research for your business. So again, it's important not only from a tax perspective and maintaining it. You have the obligation to maintain it, but you may actually want to go back and look at it and look at kind of period over period expenses or bills from certain vendors. And again, if you can't readily grab that information, then it becomes really, really hard to actually do any of that kind of review information. So again, you are legally required to maintain this information. What I do say is I recommend that you maintain the information that you have in a way that works for you. So we maintain everything electronically here. Everything is an electronic file cabinet, but it's your responsibility to retain the invoices that you give to your customers in whatever format you have it in, whether it be an actual paper format or an electronic format. So maintaining the invoices that you are giving to your customers. If your customers are paying you with any kinds of checks, retaining copies of the checks. Again, it can be an electronic format. It doesn't have to be the actual paper checks. If you are getting paid electronically through any of the electronic vendors, the Stripe, a PayPal, things like that, you'd want to retain the documentation, the statements to support that. On the other side, your expenses, your deductions. Are you maintaining the actual expense receipts? If you're going physically to a location, swiping a card, you're getting a receipt from that particular individual, retaining that. Again, it doesn't have to be in that paper format. Are you retaining it in an electronic format that allows you to easily go back and grab that information? Again, it's your responsibility to maintain that information. It also becomes important too, should you be eligible for tax credits. You may need to go back and look at that information in order to determine if you truly are eligible. And again, if you can't find that info, it becomes very challenging. And again, you could potentially lose out on deductions or potentially lose out on tax credits. Again, you want to protect yourself from audit. One of the biggest problems that I've seen when clients have gotten audited is when you are unable to present your supporting documentation to, in fact, support the expenses that you have in your business, they get disallowed. The service says, nope, we're going to take that expense off. And so that inability to maintain that receipt or that invoice means that they're going to potentially disallow an expense because you can't prove it to them. So it gets very costly should you be audited somewhere down the road. It can be very costly because you could lose out on deductions because you can't prove them. So again, super important from a tax perspective to maintain that information. and again, just monitoring the health of your business. If you don't keep the expenses, are you actually including them all? If you don't actually keep the track of the expenses, if you don't keep track of them, can you go back and look and see why certain things have gone up or things have changed? Because again, you've got no reference. You can't go back and look at it. So just from an overall health position, you want to make sure that you are keeping track of your records so that you can actually go back and look to see what, how your business is performing. And then also looking at your cash flow, like where are you spending? If you have an invoice, you can actually see that you're starting to spend more money with one particular vendor. And now you can go back and look at them and understand what is happening with that one vendor or two vendors, because now you've got the documentation to look back on. So what are the types of records that you're going to want to keep? Again, as I mentioned, you're going to want to keep the invoices that you raise to your customers, any kind of sales receipts. So for example, again, if you're using any one of the payment processors, a PayPal, a Stripe, a Square, any one of those types of things, what kind of documentation can you get out of those products? It's your responsibility to retain that information outside of, especially outside of the product. So our recommendation for clients is every month pulling out the necessary reports out of those products and saving them in your own documentation so that you have it readily available to you. The other issue that you want to think about is, should you change from one provider to another, you typically lose access to your history. So should you move from a Square to a Stripe or a Stripe to a Square, again, either one, you're potentially losing access to the first, and therefore either one, completely losing access, or two, having to go back and download all the reports to actually have that documentation to support it. It's far easier to go on a monthly basis, pull that info down, save it to your drive, and now you have it. The other things you're going to want to keep is if you're physically going to the bank and you're making deposits, any kind of deposit slips that you may get from the bank when you make the deposit. I know a lot of the banks have moved away from the actual deposit slips that you would actually give. You actually typically will get some sort of slip or receipt from them when you are exiting. Again, it's your responsibility to retain that information. You want to make sure that you can prove what it is that you deposited, proving that based on that deposit slip. Keeping your bank statements, again, we recommend, while you can keep them in the bank's portal, we do recommend that you pull your bank statements down on a monthly basis and save it into your files. We do accounting for clients. We pull down the bank statements every month, credit card statements, etc. We save it in the client's file. We save it in our files anyways. We do not rely upon the fact that it does live in the bank's portal. Again, similar to the payment processors, should you leave that bank, you are unable to get access to their portal, so you lose that history. The other thing is, after a certain point, you are unable to access certain histories back a certain period. So if you ever needed a copy of those statements, again, for example, should you be audited by one of the taxing authorities, you are going to need to provide your bank statements for the period under audit. We've unfortunately seen where clients have had to go back to their bank, request bank statements out of the archive, which typically costs money for them to get that information. So super easy to just pull down copies of your bank statements every month and then save them to an electronic drive. Most banks probably aren't sending you a paper statement anymore, so you'd need to go into the portal and save a copy of your bank statement. But again, that's things that you should be doing as a business owner and retaining that documentation. Your expenses, your receipts, again, same thing that we've just talked about. You go into a specific store, you go to Home Depot, you go to Staples, Walmart, wherever, you have that receipt, you maintain a copy of that receipt. We retain everything electronically. When we work with our clients, we use electronic tools in order to maintain those expenses in an electronic format. Keep in mind, you can keep the paper receipts. I have found is, over time, most of these paper receipts, the ink on the paper receipts begin to degrade. So if you don't capture those receipts in an electronic format, there is a chance that over time, the receipt itself will degrade and you actually won't be able to see what you had actually purchased. So Again, you can keep paper receipts. Just keep in mind that over time, they can potentially degrade. Any canceled checks that you write that will support any receipts or any invoices. Keep in mind if you are if you are audited, the canceled check alone is not proof of an ordinary and necessary business expense. You really need to have the invoice or the receipt to support that canceled check. But again, the canceled check is part of that documentation that you need to retain. Most of the banks typically will provide you with a picture, a snap picture on your bank statement of that cleared check, and that is sufficient. Most of the times you don't. In the olden days, you'd get a canceled check back, and this is going back way back. But the electronic format of showing that canceled check, again, what you see inside of your bank statement is typically sufficient for proving that canceled check, especially if you need to prove to a vendor that you had in fact paid them. You can show them a copy of the canceled check from your bank statement. That will still suffice as well. But again, the canceled check for audit purposes is not sufficient enough evidence for ordinary and necessary business expense. You actually need to have the invoice or the receipt that it supports. Again, credit card statements, it's the same thing. Your credit card statement is not sufficient enough evidence in an audit for you to present to an auditor, right? Just because you swiped your card and you can see the charge on a statement, it doesn't mean it's an ordinary or necessary expense. Any of the taxing authorities are going to want to see the original receipt or the invoice that goes with that swipe on that debit card, that credit card, etc. So you need to have that additional layer of supporting evidence, not just the bank statement or the credit card statement, but the actual receipt or the invoice that goes with it. Sometimes clients have petty cash. So again, you would want to retain the petty cash receipts. All of this you can retain electronically. It does not have to be maintained in a paper format. Again, becomes a preference. We have everything electronically. We have it backed up twice. I prefer that. I don't particularly care for maintaining a lot of paper receipts and envelopes and folders, etc. But there are some clients that do prefer that backup to have that paper, and that's okay. Just keep in mind, you want to retain that just like you would in any way, whether it be a manual format or an electronic format. You want to keep record of any assets you've purchased, right? So in construction, that's a really big deal. Clients are buying vehicles, they're buying heavy pieces of equipment. So you want to retain the documentation you receive from, again, the dealership that you purchased it from, the equipment company. There's going to be typically we'll call it like a purchase and sale document that lists out everything. With the vehicles, it's going to list the VIN number, what you paid for it, the taxes and fees and everything associated with it. Maybe you're trading in a vehicle and so on and so forth. You want to retain that documentation as proof of purchasing that vehicle. Again, with that vehicle or that piece of equipment, that large heavy duty piece of equipment, you might purchase a backhoe or something like that, a very large expensive piece of equipment. Again, you're going to want to maintain all of that documentation supporting the fact that you purchased that piece. And if you, in fact, also purchased it with some sort of financing, you want to retain the financing documentation as well, right? So you paid X for it, you're financing it for X months at this % per month. This is the monthly amount you're paying. This is when you pay it off, et cetera, all the terms of that loan. You want to maintain all of those documents specifically together. Number one, it will help your accountant to make sure everything gets recorded appropriately in your business. But should you need to go back and look at anything, you have all of the documents together. Again, you will need this information. Most of the road vehicles are going to be registered with your local states. The heavy pieces of equipment typically are either registered with your state or the DOT. So you want to make sure that you have that information, because in most cases, you're going to need to register these pieces of equipment with all the various state and regulatory agencies because you have this stuff. Again, you've purchased an asset. You want to keep that purchase and sale doc. You want to keep the loan docs. Now you have a depreciation schedule. It's important to retain the depreciation schedule. We provide it to our clients with their tax returns every year. I've seen other CPAs and EAs that don't do that. So it is your responsibility as the business owner to retain a copy of the depreciation schedule. It's not the CPA's responsibility. So you want to make sure you have a copy of that depreciation schedule that supports all the depreciation that is on all of your business returns, as well as potentially any kind of depreciation activity that's recorded into your. In most cases, our clients are using QuickBooks Online, but again, whatever financial statement, whatever ledger statement, service or ledger product that you're using to retain, you'll want to keep that information as well. What else do you want to keep? Payroll records. It's your responsibility as the business owner to retain payroll records. So, do you have timesheets? Are your team members required to turn in timesheets? So, if they're paper timesheets or electronic timesheets, you're required to retain that, because that supports ultimately what was turned over to the payroll service to, in fact, create the paychecks for your employees on a periodic basis. So you want to keep that information. You want to keep copies of the actual weekly, biweekly, bi-monthly payroll registers that are a result of that entire payroll. So that maps out who got paid during that period, the withholdings, any tax expense to the entity, so on and so forth. You want to have copies of that. Again, most of this information is going to live in whatever payroll processing portal that you happen to use. Again, like anything else, once you leave one of these vendors, you lose access to this historical information. The other thing is after a certain period, if you're with one of them for a significant period of time, a lot of the information in the older years goes into an archive and you can't readily access it. So it's best practice to go down on a weekly, bi-weekly, bi-monthly period. However, when you get paid, pull down your payroll register, save it into your records, and then you have it. It's your responsibility to retain copies of the W-2s at year end, all of the W-2s that go out to your employees, all of the tax filings that go with all of those employee filings. So those quarterly tax reports. It's your responsibility to retain those filings just like you would retain any other copy of a tax return. The W-2s especially, a team member could potentially come back after the fact and ask for a copy. You are required by law to, in fact, provide them with a copy of that. You cannot withhold it. So it's your responsibility to retain copies, whether it be in a paper format or an electronic format, of those W-2s that you're remitting to your team members. I've seen it. People have come back after the fact. I actually had a team member come to us recently. They were in the process of purchasing their a home, and they needed their W-2 from 2 years ago. Again, as a taxpayer, I don't know why you don't have a copy of your W-2, but she did not have it. And so therefore I needed to go back into my records and provide her with a copy of her W-2. So again, it's my responsibility as the business owner, and yours as well, to have that readily available should somebody come back and want it or need it. And then again, keeping copies of any prior year tax returns you filed, any correspondence you've received from the IRS or from any one of the taxing authorities, records of your tax payments. One of the things that we have a problem with every year with clients is if they make an estimate, they don't keep track of them. So then we are trying to figure out when they made estimates or to which entity they made estimates to. So it's your responsibility to keep track of, I made 3 estimated tax payments. These were the dates, these were the dollar amounts, so that we can report them appropriately on your tax return. Unfortunately, far too often, clients don't keep track of it appropriately. We put a certain amount on the tax return and we get an adjustment from the service or from the state agencies stating, oh, this was in fact what was remitted, not this. You stated more or less or whatever. So then it potentially changes a refund or a balance due that they might have. So it's your responsibility as the taxpayer to keep a record of any estimates or any payments that you're making for older balances or for this last year's balances. You want to keep copies of that because it's your responsibility. You need to be able to prove that you made those payments to ensure that, again, they got assigned to the appropriate account should there be any challenges with any of the taxing authorities with variances between what you feel like you owe or a refund you might be owed based on what they have. So it's your responsibility to retain that information. How long should you keep your information? So there are varying guidelines. It's usually anywhere from 3 to 7 years. It's a 3-year statute of limitation on filing a tax return. But if you've never filed a tax return, the statute of limitations continues to run, and therefore you would really need to retain that information. So I recommend that you keep it on the longer, on the higher side, which would be roughly the 7 years. If you are retaining it in a digital format, to be completely honest, it's just a little bit of digital information saved in whatever area that you happen to have it saved. We maintain it. We maintain it in a cloud as well as on an actual drive as like a second backup, and that's just me personal. For our business and then for myself personally. And so I happen to have more than 7 years because everything is in a digital format. I don't necessarily purge it. When you retain it in a digital format, it's a lot easier to keep a lot longer of years because you're not you're not keeping track of, or you're not keeping box after box of paper and manual invoices and things like that. So when people were in fact retaining actual manual paper for invoices and receipts and so on, to be honest, yeah, after 7 years, people wanted to purge the information because there was so much. You could go into almost any client, especially a client doing $4 or $5 million a year, and they could have had an entire room full of boxes and documents in it. So they're dying to purge anything that's more than 7 years. But now that a lot of things are in electronic format, again, we say the rule of thumb 3 to 7 years, but now that it's electronic, I mean, I personally have longer than that. That ends up being a personal preference. But you want to make sure that you have the ability to go back and prove that information. And you do want to keep your tax returns into perpetuity. That's one of those things you don't want to have to go back and grab an old one, especially if you can't find it. Again, there are going to be different rules of thumb for time, but I would typically say this: the 7 years is usually a good rule of thumb with retaining that information. I think you're going to be in a good place with having kept good quality information for an extended period of time. So we've talked about it: paper versus digital. There are pros to each, there are cons to each. If all of your digital lives in the cloud, if you can't access the cloud, you can't access it. So again, that's a challenge. But as I mentioned with paper degrades over time. So there's a possibility that, depending on where you've retained that paper, right? Those boxes of paper, where have you left that? Have you left it in a basement? Has it gotten kind of damp and moldy and it's degraded anyways, right? You want to think about those types of things. So the paper, nothing wrong with it. Just you have to ensure that the integrity of the paper has been retained. And then with the digital, again, you can mass keep a lot more information, but you also want to make sure that you can access that information. So should you have an issue not be able to access the cloud because you don't have power or something like that. Again, little things like that you do want to think about. You want to keep your records organized. Whatever works for you, but keeping all of your invoices you raise to customers together for a year, and then all of your receipts for a year together, and all of your payroll together. Typically, if you keep it year over year together, and if you have a lot of information, maybe you're going to want to keep it month by month by month. That might be a better option for you. If you're a smaller entity, you might not need to month over month. It's just keeping all of it together. But again, I would recommend that you keep the information together in a way that you can go back and easily access it should you need to do that. Keep your business and your personal expenses separate. As always, your personal expenses should not be in your business, and your business should not be in your personal. It's hard to keep track of. The other thing is there's the stress of just keeping the information separate. So if you are retaining your receipts, do not retain your personal receipts with it. Again, it becomes very confusing. Same thing with the business. Don't keep your business receipts with your personal. It just keeps cleaner records. You don't want to have to go back and dig through your personal records to find business expenses should you actually fall into a place where you are audited. It just becomes very cumbersome. Audit can be stressful enough for a taxpayer. And now if you cannot readily find your information, it becomes even more stressful. So again, maintain your information in a format that you will be able to go back and find it. Don't use a filing format that this one uses over here because they say, well, if that doesn't work for you, do this stuff, do what works for you. And that's really one of the first rules of thumb is do a way, whatever way you think you're going to find your information, then you retain it that way, however you feel works best for you. I will mentioned it before. I feel like you should go paperless. There are you can maintain more of that information. It takes up less space. You don't have to worry about the actual information degrading, in a moldy basement or in a hot attic where everything, deteriorates. Again, you could potentially have physical damage to your documents. So it's something that you do want to think about. Again, cloud solution, you could do the cloud and we do the cloud, but I also keep a hard backup as well on an annual basis. I keep a hard backup. It's something that I happen to do. Doesn't mean you have to. It's just something that I do. Again, you always want to make sure you keep, and again, if you've got backups in two different cloud places, then that might work for you as well. As I mentioned earlier, you want to make sure that you are retaining the documentation because ultimately it's your responsibility as the taxpayer to retain that information for tax purposes. It's no one else's. If you don't have it when you come up and are presented for audit, it's your responsibility as a taxpayer to have retained that information. So you again want to retain this information. There are certain things that you absolutely have to keep detailed information and records for. So for example, if you're using business use of your home, right? You need to keep detailed records of that, of the office expenses that you had in your home. If you are using a vehicle and you have mileage, you need to keep detailed records of the mileage. That's all information that you need to retain for your business purposes as well as potentially audit purposes. Now, again, these things can be electronic. They can be paper. You could keep an actual paper log in your car. There's nothing wrong with that. The one thing is that it is your responsibility to keep track of it. No one else's. So do what works for you. If logging your mileage in a little mileage log in your car works, then do that. If you're using an app, use that. But it's your responsibility to retain that information. So it's important to, again, any home office deductions you're taking. Travel is a really big one. Meals is a very big one as well. Should you be audited, you cannot be going out and getting your morning Dunkin' Donuts on the business, on the business debit card. It is not ordinary necessary business expense. So when you are retaining those receipts from those meals that you are in fact having with clients, those are receipts that you not only have to retain, but you need to make a documentation on there as to what you're doing. Oh, I was having lunch with this prospect. I was having lunch with this client. I was having lunch with the client's insurance agent, whatever. You need to keep track of what you're doing with that travel or that meals and entertainment. So it's your responsibility not only to keep that receipt, but also retaining a log of what you did with that one particular item. So again, the documentation or the maintenance of that documentation retains with you as the taxpayer and the business owner. Again, you want to make sure you have this information. If you can't prove mileage, mileage gets disallowed. If you can't prove that meals were had with clients and prospects and they had a true business purpose, and it wasn't just you going out to dinner with your wife or your husband, those are the types of things that very easily get disallowed in an audit because you just can't prove it. So it's your responsibility. The burden lies with you as the taxpayer to prove the expenses that you've incurred for your business. Again, proper documentation is rule number one. I had a client many, many years ago. They came to us because they were called for audit and we were unable to present a large amount of the expenses, the actual documentation to support them that they had in fact put on their tax return. We had not done their return. They came to us after the fact when they were pulled for audit. They not only lost the deductions because they could not prove the expenses, but they were also fined for not having maintained proper documentation, which is required. So again, you don't want to lose out on deductions because you didn't retain proper documentation. So, some of the consequences of not retaining the proper records is you could actually miss a deduction, right? There may be things in your business that you could have taken as an expense that you didn't because you didn't have the proper documentation. So you don't want to miss out on things. And then you don't want to see things get disallowed. You don't want to incur penalties and interest for having inadequate records. That's quite costly as well. It's very inexpensive to keep a screen grab or a snap, a pic of a receipt. It's a lot easier to do that than to pay the penalty for not having proper records in your business. So there's always that chance that, again, you could potentially get, chosen for audit. That is one of the largest places where you could potentially expose yourself, where the lack of records could truly hurt you. But it is your responsibility as a business owner to be able to retain those records. We are seeing a large number of our clients in various parts of the construction industry that are beginning to consolidate. Some of these companies are acquiring other companies, and if you don't have proper documentation, it is very hard during a sale transaction or a purchase transaction, because now suddenly there is not historical information to rely upon. And it's a hard decision, especially for an acquirer, to make the determination that you are in fact going to acquire an entity if they can't in fact provide you with basic levels of documentation. So as we are moving towards a world where businesses are consolidating and there is real opportunity for a lot of these companies, having a lack of records to support what you have in fact shown as your financial information over a period is actually a red flag and could be a challenge. It could potentially be a loss of an acquisition, or a sale for you as the business owner if you don't have the proper documentation. And then as the acquirer, it's also a red flag if the entity you're looking to acquire doesn't have that basic info, because there's a concern that if you don't have that basic info, what is inaccurate and what else don't you have? So again, things to think about. So there are a lot of different aspects of the record keeping. So it's important that you keep your records. It's because regulatory, from a law perspective, you're required by law to retain them. You could potentially expose yourself in an audit if you don't have the proper documents. You could lose tax deductions because you don't have the proper documentation. You want to keep records of the revenues coming in, the expenses going out, any assets that you're purchasing, your payroll records. That's all your responsibility as the business owner to retain that information. We say 3 to 7 years to retain the info. I'd probably go up to the 7 just to be careful. And then sometimes you want to go back and look at history because there's information that might be of a benefit to you. So I'd say up to the 7 years is always a good rule of thumb. Keep that in the best way that makes sense for you. Keep it in an organized way that works for you, whether it be in electronic format or in a paper format. You have to do what works for your own personal so that you can, in fact, go back and find things should you need it. Again, I'm a pro digital. That doesn't necessarily mean that's the only way to keep it. Manual and digital does work, but I'm definitely more pro digital. And you don't want to lose out on tax deductions because you didn't maintain your documentation. So those are all important reasons to maintain proper records in your business. And again, at the end of the day, it's your responsibility as the business owner to retain that information. Should you need it for any purpose, it's your responsibility. And if you aren't able to present it, it could result in potential penalties and interest to you. So as always, we love to hear from you. If you have any questions, please drop them in the chat. We look forward to seeing you here every week on the Construction CPA's Coffee Cafe. You have a wonderful weekend, and we'll see you next week.